Hi, welcome to the Keiser Report. I'm Max Keiser. Markets, finance, scandal. Hey, you know, a lot of people talk about something called free market capitalism, but in fact, free market capitalism is no more. What we have today is rigged market capitalism. You see, in rigged market capitalism, the folks down on Wall Street in the City of London, they speculate, but when they make a bad bet, they get the state to lean on the people with austerity measures. Now, this is not free market capitalism where somebody takes a risk, and if they are right, they get rewarded, and if they're wrong, they suffer a penalty. No, no, no. This is rigged market capitalism. And of course, the center of the global rigged market capitalist system is the City of London, which I believe should be classified as a rogue state, and sanctions should apply. Let's talk more about this with Stacy Herbert.
Hi, Max. Well, I do have rigged markets all over the headlines today.
Tell the people! Tell the people!
Well, first I'll start with two examples of this. Goldman Sachs demands derivatives collateral it won't dish out. So Goldman Sachs and JP Morgan, two of the biggest traders of over-the-counter derivatives, because all their competition has been wiped out, and their biggest being AIG, they're now able to basically set the terms. And they're actually posting less collateral on their own trades and demanding more from hedge funds. So because of this, at the end of December, this imbalance furnished Goldman Sachs with $110 billion, according to a filing. That's money that they can then reinvest in higher yielding assets.
Well, this is state-sanctioned suicide banking. These are banking arbitrage-wielding jihadis terrorizing the global financial system. Again, Goldman Sachs gets a special waiver. They're not. What is it about Goldman Sachs that they can't compete? You know, it's ridiculous. Why can't they just compete like normal bankers? Why do we have to constantly lower the bar for Goldman Sachs?
Because that's in the free market capitalism system, Max. We have rigged market capitalism. As the article points out, they're able to borrow from the Fed at almost 0% and able to leverage this, such to the point that the next headline reads, and I'm just going to read the headline, it tells you everything you need to know. Goldman Sachs derivative liability equals 33,823% of assets.
Yeah.
This is up since the financial crisis began.
That's right. Now, in a fractional reserve banking system, the idea is that the bank can hold $1 and lend out 10. Now, if Goldman is leveraged 33,000 times, you know, for every dollar that they have on the books, they're loaning out $33,000.
Well, and the important thing to remember is in a rigged market capitalist system, this is very dangerous to our collective wealth because we're the ones that have to pay when this goes wrong. In a free market capitalist system, they would be wiped out hugely and perhaps even behind bars. But they won't be because we're in a rigged market capitalist system and we will have to pay.
Well, ask the people of Iceland. Ask the people of Greece. They're being subjected to austerity measures because of this rigged market capitalist system.
I have some more, an extreme example.
Tell us more. We are interested in this. Tell us all of it.
Rapid rise in seed prices draws U.S. scrutiny. So they're alleging, you know, the Obama administration and the Justice Department are investigating Monsanto, which dominates basically 85% of the corn seed market and 93% of the soybean market. Well, it turns out that, lo and behold, despite deflation and collapse in prices around the world and almost everything, last year corn seed prices rose by 32%. And soybean prices were up 24%. So the U.S. Justice Department is looking into whether they're not sure whether or not Monsanto is able to use the fact that through their monopoly position in these seeds are raising prices above and beyond what, for example, they compare Europe has almost no rise in prices in the same products, but they don't use Monsanto.
Well, Monsanto is clearly doing God's work. They are replacing perfectly adequate seeds that have been on planet Earth for millions of years and nourished humans For hundreds of thousands of years, humans have enjoyed seeds provided by God. But now Monsanto wants to be God and create synthetic seeds or eunuch seeds or terminator seeds that are not really as good as the original seeds, but cost a lot more. What a great business model. And they can lean on intellectual property laws and patent laws to force feed this rigged market capitalist system down the throats of people all over the world. No wonder those Indians the farmers in India are committing suicide because they've got the frickin' Monsanto on their back.
Well, in the rigged market system, part of how it operates is they use the force of the state to extract, money and wealth from the population, but they also use intellectual property law, which is so vague and interpreted easily by their people in the Justice Department. So the next headline from Bloomberg regarding this case, Monsanto's seed patents may trump antitrust claims. So the Department of Justice is looking to see whether or not they are operating a monopoly, but antitrust lawyers and experts are saying, well, in fact, judges are constantly coming down on the side of patent rights. So the fact that Monsanto owns the patents on these seeds is going to say that trumps any monopoly position, restriction of competition, lack of innovation.
So they have superimposed upon the global justice system a new corpocratic supporting non-balanced and heavily favorable to monopolist system that obviates. Why do they even bother having judges and courts in the Supreme Court? Why not just close the Supreme Court and open a volleyball court? Because those people are just working on behalf of the corporations. They're not doing anything in terms of justice.
Well, you bring up a good point, because I have another issue to raise with this rigged market capitalism, and that's show trials. There used to be show trials in the 50s and 60s where you would have, innocent people basically put on trial and proven to be guilty for having views that are against the state system. Well, now we have show trials. There are these things like the Hutton Report, the Chilcot Inquiry, and now the Valukas Report. And this is the investigation into Lehman Brothers. Now, the headlines in the sort of populist media read like, Lehman cooked books before collapse. And then I have a little clip from Dylan Ratigan on MSNBC.
The bottom line, while many Americans and many in our government would love for you to believe that the financial crisis and the transfer of wealth in this country was an accident, this report comes just short of suggesting this is by no means an accident, but instead one of the greatest crimes ever perpetrated against a group of people. This crime, an accounting fraud perpetrated by bank CEOs against the American taxpayer and enabled by the U.S. government.
So it's like Enron. It's fraud. The government's participating, right?
Yeah.
You'd think, well, in a free market system, people are going to go to jail, and this is going to be corrected. This shouldn't have happened in the first place. But you read the headlines. Just the headlines tell you what is actually going to happen. Lehman's hidden leverage shenanigans may haunt Fuld, Dick Fuld, the former chairman of Lehman Brothers. Lehman bosses used accountancy gimmick to cover up debt. So gimmicks and shenanigans, not fraud, that is being used in the financial press.
Right. So, in other words, after the Enron scandal, the lessons learned from Wall Street, the lessons were, let's try to prevent another Enron-style fraudulent accounting debacle, but let's change the laws so that when we do this again in a few years, we won't get caught, we won't get prosecuted. This is another example of rigged market capitalism. The people doing the rigging simply change the laws. I mean, when I was working on Wall Street, I was told all the time by my management, when I was working at big firms on Wall Street, they said, we don't care if you break the laws, we got lawyers. We'll just rewrite the laws. And that was the mantra of Wall Street is, do whatever you want to do. We're the reckless abandon because we can always just rewrite the law. And by the way, all the lawmaking boards are dominated by bankers and brokers. So it's criminality with impunity.
You bring up your experience on Wall Street. And all of these headlines are shocked that Lehman Brothers cooked the books. That takes me to a headline from July 9th, 2008 on the Huffington Post by the author Max Keiser. Peekaboo accounting and the crash of financial stocks on Wall Street. Max, how did you know this was going to happen? You almost verbatim, you say exactly what this Anton Valukas findings are into the Lehman Brothers collapse.
That's right. I blew the whistle 2 years before that report came out.
Exactly.
That Lehman was using what I call peekaboo accounting. In this case, we now know it as repo 105, 108 accounting, which is at the last minute before the end of the quarter, simply borrow a few billion or $50 billion to show the regulators you've got something on your books, and then you have to return it in a few more days once the regulators have left town, and you keep this cycle going. And it's just a technique that is used on Wall Street going back 20 years in various ways, shapes, and forms. You know, whether you call it the error account, as we used to call it, or whether you know, it has many names. Look-back trades is another euphemistic expression. And traders have many ways to describe what is basically accounting fraud. And so when I was looking at Lehman Brothers and they're saying, oh, here's our books, here's what we're reporting, here's the leverage ratio, I'm saying, oh, that's just, yeah, I know that they're doing peekaboo accounting. I laid it out on the Huffington Post. And not many people took much notice of it because at the time, you see, unfortunately in America, people don't really, they're so addled on methamphetamines over there that the size of the scandal has to be really huge before you kind of wake them out of their drug-induced comas. So just subtly mentioning to them, oh, by the way, this Wall Street bank's committing massive fraud. Here's how they're doing it. People are like, hey, man, where's my drug fix? You know, where's my OxyContin? You know, whatever this, OxyContin. What do they call it? The drug? There's not enough painkillers in the world that's going to sufficiently dose America into accepting the fact that their entire country's being stolen by bankster shysters.
Well, and you brought up at the beginning of the show the fact that London is the haven for all of this. Remember, the Bernie Madoff fraud was committed via London. All of the fraudulent accounting happened there. The AIG fraud, the collapse, the $185 billion fraud happened via London. And Lehman Brothers, their fraud was channeled via London as well. Linklaters was the only firm willing to sign off on these accounts, but, you know, in the report, the Anton Valukas report, it's like, well, this is technically illegal according to U.S. law via the Sarbanes-Oxley Act. But in London, in English law, it's not against the law.
All right, Stacy Herbert. This show just writes itself. It's fantastic. These guys never quit, and there's no laws to stop them. It's always markets, finance, and scandal. Right back with much more right after this. Welcome back to the Keiser Report. Now, David McWilliams started his career as an economist at the Irish Central Bank before becoming a banker, first at UBS, then Bank Paribas. David is now a columnist, television presenter, and author of the bestseller, The Pope's Children. David, welcome to the Keiser Report.
Hi, Max. How are you?
Now, David McWilliams, lay out the situation in Ireland. When did the banking system collapse? How many billions has been transferred to the taxpayer of debt?
From the taxpayer to the banks. Yeah, okay. What happened was the Irish banking system was operated in a most delinquent fashion for about 4 or 5 years, chasing the property bubble in the main, initially here and then all over the world. And obviously, as you know, Max, when these bubbles emerge, the quality of the collateral begins to decline as the banks chase the market. So by the middle of 2008, it was apparent to many people that the banking system in Ireland was on the verge of collapse. This collapse came in September. I happened to be on a radio station with our Minister for Finance in the early weeks of September when I told him that the banking system was probably on the verge of a run on the banking system. He denied it, but within about 2 weeks, the banks were guaranteed. And ultimately, now what has happened is, like all these cases, the initial expectations of just how bad the loan book have been revised downwards and downwards and downwards. And now what we have is a loan book where the collateral is probably worthless in many cases. And this has been compounded by the fact that the banks were not allowed to go under. We guaranteed the liabilities of the banks, initially temporarily, and I would hope that that temporary view remains the main case. But what has happened subsequently is that the bankers have ran the government a merry dance. The bankers have really got exactly what they wanted. There's been no change at the top of the banks, any real manifest change. The bankers have given the taxpayer an enormous contingent liability, which could be anywhere up to 30 or 40 billion euros, with a country with a GDP of about 120 billion. So you're talking that the banking system may well ultimately cost the taxpayer some 30% of Irish total income, which would make it the most expensive bank bailout ever in the history of financial markets. That's what we're facing here. And the second problem is, Max, there's no guarantee that bailing the banks out is going to lead to the requisite credit flowing back into the economy, because in order for us to get credit back into the economy, we need to get somebody else's balance sheet, which is more significant than our own, in order for the banks to lend. So what we have is a classic, what Keynes would say, a liquidity trap. The banks don't want to lend because they're bust. The people don't want to borrow because they're fearing bankruptcy, and the economy is seizing up.
Right, and of course, the government is imposing austerity measures, and we're seeing austerity measures in Iceland and austerity measures in Greece, and it's all connected to the same group of bankers who have all been connected to the same failed policies, and yet for some reason the fingers being pointed at the people as if they caused the problem and not the bankers colluding with the government. Now, you write, it's time to shout stop. NAMA is grand larceny. What is NAMA and how is it grand larceny?
NAMA is the acronym for the National Asset Management Agency, which is, in a sense, the government's writing a check. What the government's going to do is it's going to buy up all the loans from developers for commercial property. What they're hoping is that over the course of the next 10 years, the property market in Ireland will resuscitate itself. They are borrowing from tomorrow to pay for the sins of yesterday, and in so doing have forgotten that the economy needs to breathe today. That is what NAMA is. I believe that once the taxpayer was put on the hook, I think there could have been a bad bank situation which could have worked had the banks themselves been given the bill every year to take it out of their profits, and they would have basically ended up like utilities, and the banks would quite clearly have simply made no profits for shareholders over the course of the next 5 or 6 years, because they would have paid for the write-downs. However, once you decide to put the taxpayer in there, you end up with a scam. And the scam is the following, Max, which is that in all countries that have banking crises, whether it's the United States, whether it's Iceland, whether it's Greece, well, Greece doesn't really have a banking crisis, it's a sovereign government crisis, what you see is the bankers use the crisis as an opportunity to extract wealth out of the rest of the citizens, which is precisely what the TARP is in the United States and exactly what NAMA is. NAMA really is, in effect, our TARP, except, oddly enough, TARP is probably more liquid. The assets in TARP are probably more liquid.
Okay. Now, it sounds like Dick Fuld is the one who designed NAMA, and it sounds just like another version of basically what's now known as Repo 105, 108. It's just accounting fraud to help the worst elements of the banking establishment perpetuate their banking crimes. Now, people were very excited that you were coming on the show, and they wrote us some letters and some questions here to the Keiser Report. Here's a question from Danny in Cork. He asked, Ernst & Young have been implicated in the Lehman Brothers bankruptcy recently for failing to challenge accounting gimmicks that allowed Lehman to hide some $50 billion in assets in 2008 while claiming it had reduced its overall leverage levels. Ernst & Young have now been appointed to NAMA when they signed off on the Anglo-Irish Bank's crooked accounts. What is going on here? Why is this being allowed to happen? Is corruption the business model now in Ireland?
Ireland is run by a very cosy elite of insiders. It always has been, and to a degree, unless something revolutionary happens, it may well be for the future. And in that elite are the big law firms, the big accounting firms, the top of the civil service, etc. I would have thought that it would be cleverer for someone like Ernst & Young, given that they audited the accounts of Anglo-Irish Bank. And Anglo-Irish Bank may well be, it's now subject of a police investigation for criminal conspiracy. So this is what we're talking. We're not talking about inefficient dealings. We're not talking about people making mistakes. What we're talking about in Ireland now is a criminal conspiracy. For the auditors to have signed that off, to be now given a job by the government auditing NAMA, I think is an insult to Irish people. I believe that what should happen is the large accountancy firms that were involved in auditing the banks in the boom should be put in quarantine for a couple of years. You know, like just decontaminated from their association. And it's, as Danny rightly points out, it only inflames people's opinions of how Ireland is run, number one. And number two, it makes individuals angry that we're not learning the lessons. The question of a crisis, the thing about a crisis, Max, is that the crisis itself is important, but what's more important is how you respond to the crisis. How does a country, in some way, learn from this crisis? And I think by gratuitously employing the likes of Ernst & Young again, I think what it does is it sends a signal to the average citizen in Ireland that nothing has really changed at the top.
Well, the Financial Times did an editorial this week and said, well, you can't get rid of Ernst & Young like you got rid of Arthur Andersen, who was famously involved in the Enron scandal, because we're running out of big accounting firms, and who's going to do all this fraudulent accounting if we get rid of them all?
Well, I mean, that's
what the Financial Times argument was. Okay, now David in Dublin, he asked, do you know of anyone in the government of any party that is willing to call for the repeal of NAMA, and would you support such a call either way?
I would support it. I don't know of anybody. I spoke recently to the main opposition party. I think that what is most disconcerting is the sense that in Ireland now there's a sense of, well, it's going to go ahead and it's not the best deal, but we've got to deal with it. I suspect that if a political party were to say the following: one, we will allow the guarantee, which is the guaranteed of all liabilities for the banking system, which was supposed to be, as I said to the Minister of Finance at the time, that was back a year and a half ago, the guarantee is a bluff, not a policy. The bluff has worked. It stabilized the banking system. It meant that people like my mother didn't run and take her money out of the banking system. Now it has worked. It's time to allow it to lapse. And by allowing it to lapse, I mean we put it in for 2 years. Number one, you do that. Secondly, then you go and deal with the creditors. You say to the guys, listen, sorry, we don't have the money. You lent, for example, Anglo-Irish Bank money or AIB or Bank of Ireland. You didn't lend it to us, and we don't have the cash now, and we will do a deal with you like the Brady Bond deal in emerging markets years ago, which is an area I worked in the 1990s, and we'll do a deal on 10 cents in the dollar or 5 cents in the dollar or 20 cents in the dollar. And that is what needs to be done here, because something like NAMA will simply mean that my children will end up paying for the mistakes and the criminality of certain members of the top of the banking system for the next 20 years. So it's clearly absolutely ludicrous. What will happen is Ireland will end up buying fields in the middle of the countryside, which should be down now at agricultural prices, i.e. these fields, so-called development land, is probably worth only as much as a farmer would pay you to put cattle out to graze on these fields. We will end up buying these things for a huge premium, and the bill will be given to our kids. That makes no sense at all, and much better off allowing the banking system to right itself by simply saying to the creditors, we don't have the cash.
Well, what's scary is that the governments are throwing money at this problem while they are simultaneously being told by the bankers that, oh, my gosh, we've just discovered another $500 billion or $1 trillion in bad debt, and the net result is deflation. And this deflationary spiral seems to be continuing, even no matter how many hundreds of billions and trillions they throw at the problem. So even if they try to ring-fence these bad debts, it just seems like there's no end to the spiraling debt vortex. And as a matter of fact, they're making it worse because they're just adding more layers of debt. Now let's ask another question. Came in from Dork, the Dork of Cork. I don't know if you're familiar with the Dork from Cork. His question is, given the large exposure of German banks and London houses, were instructed by the ECB to keep paying the bonds regardless, with the threat of euro expulsion if they took a haircut. What about this?
Look, I mean, the best way to look at the Irish banking situation is a traditional hostage situation, right? Mm-hmm. What they're saying to the government is, if you don't bail us out, we'll shoot the hostage. The hostage is the economy. So what they're basically saying is that if you don't continue to pay us all the money that we've borrowed, we will shoot the economy will die, and ultimately you, the politicians, will end up losing your jobs.
So we're dealing with a bunch of suicide bankers.
So it's a hostage situation. Mm-hmm. So you've got to look at it in that way. Now, how do you deal with a hostage situation? There's two ways of dealing with it. One is you talk them in from the cliff, and in many ways that's what most people do in a hostage situation, or else you simply storm the place. But ultimately, what you can't allow is for the kidnappers to dictate the terms. And this is what's happening. And maybe to a degree it's got to do with the fact that, as I call it in my latest book, Follow the Money, Nama should be called Vietnama. And the reason it should be called Vietnama is the fact that the ECB looks at countries like Ireland and Greece and Spain and Portugal as a wee bit like the American Pentagon used to look at the countries of Southeast Asia. And the idea was the domino theory. This was informing the Pentagon's thinking, which is that if Vietnam goes, Indonesia will go, and Malaysia will go, and all become communist. The ECB's view is that if the Irish banking system is allowed to go under, or if a bank fails in Ireland, that ultimately this will cause a domino effect and banks will fail all over Europe. But that's not necessarily our problem. That is the ECB's problem. It's the ECB runs the euro. So I think what we should be doing as a country is trying to reiterate the fact that the vast majority of the people who lent us money are other European banks. So we have an internal balance sheet problem between European banks overseen by the ECB, and that's where the issue should lie.
All right, David McWilliams, we're going to have to wrap it up right there. Thanks so much for being on the Keiser Report.
Cheers, Max. Take care.
All right, and that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and David McWilliams. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.